Gagging. I have a 17-year-old dog gagging right next to me as soon as I turn the microphone on. All right, so this is going to be a little different than what you're used to. This is not one of those events where I'm going to patiently and quietly and methodically explain things to you. Every now and then, people just need to be smacked around and kind of hit with a 2x4 to get you to pay attention. A lot of times I get asked the most random, weird questions. A lot of times, right after I explain something, I get people that need me to explain it again, or they don't look, at the provided materials. They don't uh, uh, aren't actually listening to what I'm saying. They're just waiting for an opportunity to tell me what they're thinking and what great traders they are, and how what we're doing is wrong or whatever. This isn't one of those events where I'm going to be uh, particularly, well, I don't know, like I said, patient. So, yeah, is there an echo? I don't know why there's an echo. It should not be echoing. You're not hearing an echo? Let me turn this microphone down just a hair, or help turn my speaker down. Maybe you're getting it from my speaker. Are you still getting an echo now? Okay. All right. So we have these events from time to time, and it tends to bring out the trolls, the people that tend to think they know more than I do, that come to webinars to talk about how great whatever it is that they're doing and how stupid we are and all of that, and go to a lot of effort to make real asses of themselves. So Connor's going to put on the moderation here because those people always show up. If you ask a question, Connor's going to approve your question, and then it'll show up in the chat. If he doesn't approve it, it's not going to show up in the chat. Okay? All right, so let me show you something real quick here. For those of you that have very little experience with what we do here, got a few trades we took in the trade room today, so you can get a little bit better understanding of what we do and what we're going to be talking about over the next 3 days. Watching NQ? Gotta have a rock star. Can't trade a speed tick without major support or resistance. Nice pop up, one tick. Sold the NQ. +5. All right, so we got a nice push up here from way down here. We started pushing up, then it got a little bit more intense, a little bit stronger. Notice the gray of this bar is a medium gray, so we're going from black to light gray, or medium gray to light gray to white. The lighter color it is, the more likely it is that exhaustion is going to be setting in. Look at all this confluence. Look at all of these different sets of data. Each little indicator is a piece of data that suggests that weakness is setting in and this is going to happen. So at the open of this bar, I'm going to short it and down it goes. Just textbook. Now this is let's see, what was this? I didn't even notice. It could have been a rock star or a naked rock star. Rock star needs to have resistance behind it within 5 ticks. Naked rock star, we didn't even need this line. Okay.
So either way, it qualified because for a naked rock star, even if it was more than 5 ticks, because this bar is overbought. That's this pink outline, and we have a pullback alert. So it qualified whether it's a rock star or naked rock star. So this was a nice little pullback here. Now our expectation is that this short-term trend um, is going to continue. So every trend has these series of pullbacks, and then they continue on. It could also be a reversal. I don't know, and I actually don't even care. This is my sweet spot right in here. This is where I have a high probability of understanding what's going to happen, and this is where we trade and in, out, done, money in the bank, and sit and wait for the next one. Bought the YM. That was really fast. +5. Could barely get that out of my mouth before it took off. Another nice hard drop. Momentum bar getting lighter. Speed tick. Pullback alert. Low of the day. Major support line. Look what price did. Slammed into that major support line. Backed up a little bit. Opened here and took off. Again, look at all this confluence. All right, bought the NQ. Yep, +5. Another winner here. Got a nice drop. See the momentum. See how we're breaking out of this channel here? The breakout is not what we want to trade. It's when we break out of this channel, we realize that we've got a strong push, a lot of momentum pushing, and we know that at some point the buyers are down here waiting. The sellers are going to push it as far as they can, as fast as they can, and so that's why we got the speed tick here. It's oversold, and then on the open of this bar, we had a divergence signals, many of them, that said that even though price is doing this, momentum has shifted to this.
All right, so that's what we're going to be talking about. We're going to be learning. I teach just the way you see it in the trade room. Now, before we get too far into this, everybody see the shared files in the bottom left corner. On the right side of the shared files, you should see a download button. Can everybody see that download button? It's a light blue button on the right side. All right, download those 2 documents. You don't need to do anything with them yet. Just make sure you have them. I stretched that box there because I know sometimes people with smaller screens, it gets scrunched up and they can't hit the download button. All right, so we're going to have some rules here. This whole event, you're going to be expected to pay attention. Meaning, at any point in time, I may just pick a random name and ask you a question about what we are talking about. You're expected to be accountable for paying attention. We're going to check if you're paying attention. You're going to be given a quiz or 2 or more. And we're going to assign you some homework to do tonight, so when you get here tomorrow, we'll have that to talk about. That's the after camp study. All right? If you ask me a question about something that does not directly pertain to what I'm talking about, you might find yourself gone. All right? Rude or random comments will get you ejected without warning. Connor has an eject button. And if you say something rude or off color or random about one of us, somebody in the group here, about the trading, about any of that, That's not what people are here for. You make yourself look like an idiot, and then we're going to kick you out. So be prepared to answer questions or be ejected. And I am going to cover the same thing several different times in several different ways. This is how we learn. Okay? You do not learn something by hearing it one time. Some of us can hear it 2, 3, 4 times, we get it. Some of us, it takes 50 times until we get it, and some of us takes 1,000 times until we get it. I'm willing to do the work to make sure you understand it. So I will be, over the next 3 days, repeating things in order to reinforce the first few times you heard it. Now, if this is too much for you and you really weren't planning on paying attention and you don't have time to focus because you are going to be doing other things, then you should probably just stop now. Okay? And don't waste your time. Now, if you're already a successful trader and you've come here just to see what we're all about, or just to see if we have a new indicator to teach you about, you don't need me. Okay? We have all kinds of videos and documentation and information about our indicators and our trading system, and man, we've been doing this for a long time. If you go to our website, you go to our documentation, you go to our YouTube, there's enough information where you can know as much about this trading system as I do if you want to do the work. Okay? You don't need me for that stuff. You do need me to teach you what you don't know about trading. Okay? So if you're not going to pay attention, you can leave. If you do and you want to stay, I guarantee you're going to learn something you didn't know. Guaranteed. Now, I've already made this kind of clear. Oh, wait. Oh, yeah. This is, there's two kinds of listening. There's passive listening and there's active listening. Okay? Webinars are passive listening, where you just sit and you hear what the moderator has to say. There's active listening. That's what this is. You are actively listening to understand, and we're doing that because we're going to ask you questions. So we want to make sure you understand so that you can do well when we ask you questions. Any questions yet? Good. We've been at this for 10 years. I'm pretty good at this. If you do something for 10 years, I would expect you to be pretty good at it too. So if you ask me to show you charts, I'm going to get in your face because this is not about showing you static charts. If you go to a webinar and the presenter is showing you static charts and he's dragging his cursor around and say, see, look, here and here and here you have these conditions that exist, and this is where I took this trade, and look, I went all the way down to here and I made all this money because of this and this and this indicator that I invented and this and all these different things. You realize that you need to beware of that presenter because that is smoke and mirrors. If you're not learning how to trade that system or the information that pertains to that trading system or those indicators on live charts that are moving, then you're just looking at smoke and mirrors. We've all done it. We've all studied static charts. We've all gone, hey, this looks pretty good. Hey, this sounds good. I'm going to look at these static charts and I'm going to make a bunch of rules based on these lines and squiggles and dots and all this stuff that's on this static charts. And I'm going to build a trading system from that. And then what happens? Doesn't work. Well, how can it not work? It looks so good on the static charts. Why doesn't it work? Smoke and mirrors. Webinar presenters are professionals at this. They make it look really compelling, really easy. Oh, and then they're going to throw up backtesting results for you. I don't know how many thousands of dollars I wasted on backtesting results that never work. And you just can't figure out why. Look at all the science behind this. Look at all the math. Yeah, they don't work. All right, so let's talk about the philosophy of what we do. What we do is called second brain trading. There is little emotion management necessary. We're going to remove as much stress and anxiety as possible. We're going to reduce the ability to make mistakes. Okay, most of our mistakes are based on stress and anxiety, or fear, or panic, or greed. We're going to build a foundation of success before you move into actual trading. You're going to learn to become successful. Most of you have no clue how to become a successful trader, how to even act like a successful trader, how to operate on a day-to-day basis as a successful trader. Most of you have no clue. We're going to help you build this foundation of success by conditioning. We've adapted our trading to the new market realities. How is it that the big boys keep getting richer? Because computers keep getting faster. That is a new market reality. Sure, you can do your Fibonacci's all you want. You can do all these other trading strategies that you've done for all these that have been going on since the turn of not the last century, but the century before that. Sure, you can do that. But the new markets are not the old markets. So you've got to adapt to the new market realities, find the weaknesses, and exploit them. There's always a soft spot. Find the soft spot. Especially if you can find one that others haven't found or don't believe it's worth exploiting. And if the soft spot hasn't exposed itself, stay out of the market. Winning small is huge. All we think about is money, small wins. How can you make money at small wins? How can you not become successful by building a foundation of winning and grow from there? You win small and continue to do that. Don't try to turn it into something that it's not. Learning to win is the hardest part of trading, but as far as for most people that are struggling, let's look at the small wins first, learn how to win, and then move from there. Learning slow is the fastest way to learn to be a successful trader. You got to do the work. Moving slow gives you what? What's the purpose of learning slowly over time? You're going to gain experience. You're going to gain confidence. You're going to gain consistency. You are not going to step into this trading thing or a new trading system and suddenly you found the Holy Grail. Although that's what we're all looking for, not necessarily the Holy Grail, we're looking for the fast, easy way. Screw it, I've been at this 20 years and I still can't trade. I've got to hurry. I've got to get this thing done. Or 2 years or 10 years or whatever. We're always in a hurry. I spent 7 years looking for the fast way. The focus of your efforts needs to be on the other 80% of trading. 20% of trading is the actual mechanics. That's what you do when you sit down during trading hours and you place and manage trades. That's 20% of what you need to know. The other 80% is what you really don't know that you need to know, or you just don't really want to because it's a ton of work. There's got to be an easier way, right? So take a quick look here at this philosophy and tell me the one word that might surprise you that's missing from this whole philosophy. One word. You read over it, and there's one word that has absolutely nothing to do with what we do here. There we go. Money. Yep, riches. Profits. Those are the byproducts of our philosophy. You stick to the philosophy, the other stuff shows up. If you start focusing on the money, yeah, easy's not there either. Darn right. Trading is not easy. If you got into trading for easy, you need to find another line of work. Besides what happened in the past, the only thing about the markets that we know for sure is what's coming in right now, is the information that's coming into the markets right now. So if you're trying to trade 10 minutes from now, 30 minutes, an hour, 2 hours a day, the further away from right now, when you have the best information about what's about to happen, the further you are from right now, the more speculative that trade becomes. It starts turning into a guess. The longer it goes, you'll notice that hope starts becoming part of your trade management plan, right? I've been in this trade 30 minutes. Boy, I hope it goes in my direction, or it turns around, or it hits my target. Hope starts becoming way too important. There are too many variables in the markets that we have no control over, that nobody has control over. There are too many variables for us to measure them all and know beyond a shadow of a doubt what's going to happen next. That means there's some guessing going on. So that there's too many unforeseen circumstances that can just ruin your edge. And the longer you're in the trade, the more likely it's going to happen. So we're looking at using fast charts. We make fast decisions, and we're done with our trades fast. You saw one of those trades. For those of you that just got here, you missed it, but we showed a video. One of the trades we took today, how long were we in that trade? 10 seconds? 15 seconds? I was done. I hit my 3 winners today and shut down. I quit trading live. I put a big check mark on today as a winning day, and I went and changed to trading in sim for the rest of the day because I hit my target for the day. So on that video that I showed you guys, I circled around the indicators at a trade that I took, and I said, look at that confluence. So confluence is integral to everything we do here. It's a unified agreement between non-correlated data sources expressed in terms of technical analysis that something is about to change. That's my definition. So we use all these different indicators that if you go look around, you'll notice that each indicator that we use has an entire trading system built around that particular indicator or style of trading. We don't just use one. We use a bunch. All right. Simple question. Don't overthink it. What's this? What is this? We use them every day. What is it? It's a trading chart, right? What does this represent? Yep, trading chart. Filled orders, potential, price history. Let's think about a little bit deeper. Price history, price action, buyers, sellers, times. Oh, one of you are on the right track. There's only one thing besides the algorithms, which we have no control over. There's only one thing that makes price move. A chart is a graphical representation of thoughts, feelings, and emotions about the current value of an asset or price. That's what makes a trading chart. That's what makes price move. So we've got a basic market structure. Anybody, in fact, this is, you'll see this again in the homework tomorrow, okay? Not today's homework, not the one you downloaded already. It'll be the one you download tomorrow. So there's a very basic market structure that we see over and over and over again that is created by the market makers. We are all at the mercy of the market makers. We cannot control them. We can't do anything about them other than understand what it is that they do and find a sweet spot where we can exploit something about what they do. Okay? So you have this basic market structure. You and I were going to look at this chart, and we're going to sit, and we're going to be sitting and waiting for something to happen so that we can execute a trade. And you'll see the price just channeling like this. It could be accumulation, meaning this is where the market makers are actually doing a lot of buying up of the assets. They have found an imbalance, and they have decided we're way underpriced here, and we can push this price up. So we're gonna buy these assets as much as we can, but we're gonna do it really quiet, slow and steady, so that nobody really knows what we're doing, while the rest of us retail traders are snoozing. So we got these areas of accumulation. Through, and we'll go over this another time, through various manipulations, price has increased, and it channels again. Go figure. And now we're sitting here again doing nothing, thinking, oh my gosh, it's so boring. Trading is the most boring thing in the world. Well, right here's where the big boys, the market makers, are actually now making their profits. I know a lot of you believe they are stop hunting, mine and your stops, and that you believe you can see our stops and that they give a crap about my stop. And that's where they're making all their money. Now, they make their money when we're falling asleep. It's too easy for them to do it this way because we all react the same way every time. So at this point, price channeling again, they're making their profits, but they still save enough of those assets to continue with the manipulation. Okay. So again, we're going to do a lot more information about this later. I'm not going to tell you everything about this market structure. I'm telling you what we're looking for. After each one of these, you're going to see an upthrust. You will notice a bar that is substantially larger than the previous bars. You may even see one that's extremely larger. And we'll call that a climax bar. There's our tipping point. Typically, that's when the markdown happens, after the climax bar. We have an entire video on this market structure and what's going on. Send Connor an email if you'd like to see it, and he'll get it for you. Or just send it to support down here. This goes to our support desk. Any questions, just on the bottom of every slide is our email address. Dwayne, it depends on who they are. Some of them will do it on a longer time frame. The time frames are getting shorter and shorter and shorter, though, Dwayne. So yes, there's some are still doing it that way. Oh, sure, but Hendrik, that's not where they're making their money. Sure, they know where the stops are, but they're not making their money that way. Yeah, it's on YouTube, but Connor could get you the link for it. Or you could, you could do a search for volume spread analysis, and I think our video is the #1, and I explain it all inside that video. So that one will come up first, I think. All right, so if we look inside, we've got these upthrust bars. Why are we looking for these upthrust bars? Have you ever seen a trend move in one direction ever, ever, ever? So we're looking for In an uptrend, we're looking for weakness. And exhaustion is weakness, right? So we're looking for potential areas of weakness because of a singularity of thoughts, feelings, and emotions. Okay, what is that singularity? Meaning that all of the indicators that we can come up with all are in agreement with each other and suggest that price is going to do something different than it's been doing. Okay, so we're going to measure flow and exhaustion. So we're looking for increased flow to anticipate increased exhaustion. Okay, and exhaustion is the weakness. So we want to measure strength to anticipate weakness. So if we're looking at a high flow rate, you notice that the bars break out of a channel, and you'll suddenly see your trading domes or your charts just take off, right? And all of a sudden the numbers come through, bam, 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 bam. Things start really picking up. So you can see that the flow rate of processed orders is just going nuts. But does it do it for an extended period of time? Nope. It's just a quick burst. And then it's going to go whew, and pull back a little bit. And then it could do it again, or it could reverse. Don't know, don't care. So we've got this singularity of thoughts, feelings, and emotions that we're looking for on every single bar. And when we hit that singularity, which is also called what? You might want to write this down. Which is called confluence. Then we have an exceptionally strong idea of what's likely to happen right now. Remember, we're measuring every tick that comes into every bar. This is why we can't use NinjaTrader plots for our indicators. We had to create our own plots because we're reading every single tick. And as soon as a condition exists, we're going to throw up an indicator to let you know. So this is our right now flow analysis. Very important. We're going to measure for strong flow. We've got our speed tick indicator that's going to help us to understand when the algos, the HFTs, the quants, the big boys are running trades through the exchanges. How do we know this? Well, they have the edge on us because they have all the money, meaning they have all the technology, and they can execute trades way faster than we can. So when the rate of orders increases dramatically over the orders that were being processed just previously, a few bars back, it's highly unlikely that retail traders did that. So that's what we're looking for. If it's not retail traders, which is you and me, got to be somebody else. We don't care if they're buyer orders or sell orders. We don't care. I just want to see the rate of orders go through are being processed, right? We're also measuring volume and the flow of volume. Not all volume. I don't give two craps about the amount of orders going through. I want to know what kind of volume is creating the current bar. And if it's the kind of volume that leads me to believe that this bar is pretty much the limit price is going to go for a while. That's the information that I want, and that's all that we put on the bar. Just going to be a dot. Entire trading systems are built around this dot. We made it simple. I mean, if you want it to be complicated, fine, it's easy. If you haven't been around trading for a long time, it's freaking easy to make a trading system complicated, isn't it? It's hard to make it simple. So we're measuring flow so that we know when exhaustion is going to set in. Anybody know who Usain Bolt is? He's a sprinter, right? Fastest man in the world. You ever watch him run the 100 meters? You think he could run that fast for a mile and a half, 2 miles, 10 miles? Of course not. Why not? Because you know he can only go so far, so fast. We know that. We know that about the markets too. Can only go so far, so fast. Exhaustion is going to set in. And we know how to read that. We look for divergence. If you don't know what divergence is, it's when price is moving in one direction, but momentum has already shifted to the other direction. And price will almost always follow momentum. We're looking for price to get overbought or oversold. And we use support and resistance. Now, what do we use support and resistance? What is support and resistance? Anybody know what support and resistance is? In a nutshell? They're imaginary lines. They're imaginary lines that have value only because people think they have value and for no other reason. Now, how does that make sense? So we use it because we know other traders are using it, and that helps us make decisions. All right, so we've got this singularity. Now, let's see what it looks like on a chart. You guys saw the video at the beginning. If you weren't here at the beginning, you missed it. Showed you a video of 3 trades that we took in the trade room today. Looked very much like this, didn't it? We're looking at a confluence of conditions that lead us to believe there's a singularity of opinions that price is going to do something. So you'll have this confluence of conditions. All right. Questions? Did something go by here before I? No. Any questions on what we've covered? Don't start asking random questions. Connor's just itching to kick somebody out of here. Start asking random questions, he's going to boot you. He's just like that. No questions. All right. We got, I'm not sure how long you have for this quiz here. I'm going to quiz you on what we've talked about so far to see if you're paying attention. I can end this quiz at any time. All right. Now, start the quiz. You must scroll down to see all the questions. There's a bunch of them. I know some of you can only see a few questions. There's a little scrolly bar on the right-hand side. Scroll down to see all the questions. Have fun. Oh, I'm watching. You guys are screwing up bad. When about 70% of you are done, I'm going to end it. Well, you got some catching up to do. Yeah, so, and if you don't do the test, if you don't take the quiz and you're here, um, we know who did and didn't. We have a list here. Uh, and if you don't, Connor's just going to kick you out. You're just wasting your time and ours. Um, it'll come back on its own. You just sit there and wait. Yeah, I see a few of you are not participating. So when you notice that you're suddenly gone, you'll know why. We're only interested in having people here that really care about participating and learning something. Yep. All right, one more minute. All right. Which was not covered in the rules when we started today. Nowhere did I say ask as many questions whenever you like. I did not say that. Trading charts are graphical representations of thoughts, feelings, and emotions. In the example that we discussed, when do the market manipulators make their profits? Wow, a lot of you got this wrong. Distribution. Distribution. None of the above. We got 12% got that right. Everybody else got it wrong. Distribution. Divergence helps us determine when price and momentum are going in different directions. Confluence is not imaginary lines that have value only because people think they do. Static charts are the preferred way to study trade setups. It's actually both 2 and 3. False, and if you enjoy being fooled by webinar presenters. Lower flow rate of orders coming into the markets indicates what? Only 18% got it right. Lower potential for exhaustion. If the flow rate has slowed way down, that means price is probably just moving sideways, right? Or just trickling around like a slow stream. So that would be a much lower potential for exhaustion. The pullback alert indicator uses what to read the type of orders coming into the bar and at what rate they are coming in. Yeah, order flow analysis. What is the best information that we have about what is likely to be likely to happen next in the market? Oh, I screwed up. You're right. Sorry, Rick. I'm like, I looked at the wrong one. Almost nobody got that one right. And I almost screwed it up. The pullback alert uses volume to read the type of orders coming into the bar. I didn't see volume wasn't even one of the answers. None of the above. Yeah, it was tricky. You got to be paying attention, right? So this is just to let you guys know that most of you were passively listening. Look in front of you. Do you have a pen and piece of paper? Are you taking notes? If you're not, you're passive. You're being passive. This is active listening. This is you take notes. You pay attention. You write things down. All right? And when I say, do you have any questions before a test? Then you ask. Everybody got the last one right, I think. Almost everybody. Yeah, I know. All right, basic setups that we've developed over the last 10 years. You might want to take notes here. Basic. All right. So I'm going to start these in the order that they were developed. Okay? And I'm doing this so that you can understand and see the progression of the pullback trade setups and the whole pullback trading system that we have. Okay? Now I'm going to show you in the order they were developed, but I'm going to tell you you should kind of learn them in the reverse order. And the reason for that is the very first setup, it's called the FT or the first touch. It was my first pullback trade. When I learned just from lots of hours of watching that if price quickly approached, again, meaning it broke out of a channel and suddenly it blasted right into a line, maybe 3 or 4 bars or 2 or 3 or whatever, and then it ended with a climax bar hitting a line of support or resistance. If that line had not been touched either during the entire trading session or at least in the last 2 hours, then there was a really good chance that that line was going to hold price at least for a while. And when I say hold price, I mean price is going to pull back from that line a little bit before it decides what it's going to do next. Okay? So that was my first pullback trade. The very last one that we want you to learn, because over time, I've studied what's going on that bar that slams into that line. And I've squeezed as much data out of that bar as I can to understand what's likely to happen next. Okay, I'm measuring the information that's coming in right now. So I still trade the FT trades. Some of the people in our trade room still trade the FT trades. But it requires the most skill. Okay? But I still want you to understand it so you can see the development of the trading system. All right? So when a major line of support or resistance has not been touched in what I call a relatively long time, okay, that's the number at the end of the line is our relative strength number. Price is likely to react to the line. Okay? Next setup that happened after that. I started measuring. You know, it becomes pretty obvious after a while when you see that price is channeling and then suddenly you have these bars that break out of the channel and they're getting bigger and bigger. And they're much bigger than the bars in the channel. Okay? So you start going, well, what the heck happened there? Why did price just take off like that? So I thought I'd track what was going on. And I was using time and sales, and I noticed that, man, the orders just started flying through the exchanges. Not level 2 orders, the standing orders on your dome. These are the processed orders. These orders go through so much faster than we're able to trade them. We figure, well, that must be a manipulation. And if the market makers are manipulating the markets, they're doing it for a reason. So we have a trade setup when that happens. Okay? Now we have a relatively new, we've been trading it a little over a year now, Rockstar. Same conditions as the speed tick setup, except we've added in the measurement of momentum. And when price and momentum are moving in opposite directions, it turns into an even stronger trade setup. And we still use our support and resistance for this. Then we have the naked Rockstar, which is the same conditions as the Rockstar. We don't need support and resistance anymore because we're going to add in the confluence of more data that suggests price is weakening because of the strong move. Okay? That's called a naked Rockstar. All right, so these are our 4 basic setups. So we're going to talk about the FT setup first. So the FT, we're going to have price in a channel, and then suddenly price just kind of zooms up here and slams into one of our major lines. That's one of the white lines on our charts. That line is going to need to have at the end of it either no number. A line that has no number means it has not been touched at all during this trading session. So that's as strong as we expect it to be. If it has a number of 120 or higher at the end of it, that means it's been a long time since price has been at this level. And there's a good chance that if price flies up like this, gets overbought, that's this indicator, this pink line. We're going to talk about that a little bit. Price gets overbought, slams into this line. This is a potential for a first touch trade setup. All right? I'm not going to teach you the setup right now. We'll talk about that later. Just want you to understand what the setups are, and then we'll talk about them individually. Is this a FT trade? Why not? Or why? Not overbought. Very good. No momentum. Very good. Yep, no elbows. No, the no number. Well, how about this then? How about if I had 453 at the end of the line? Now is it a first touch? Same reason. No momentum. The most important part of a pullback trade is the high potential for exhaustion. Okay? Which is why we read flow. We need strong flow to anticipate exhaustion. Well, that doesn't look like a strong flow. No gray area at all. That is not an FT setup. All right. Let's look at what a speed tick trade looks like. Remember, these were developed in this order. First touch, then speed tick trade, then rockstar, then naked rockstar. So this looks an awful lot like an FT, but this time we get one of these little numbers on there. This means that the orders are coming in faster than retail traders are able to submit these orders. That means this bar is most likely being manipulated. And we know when a bar has been manipulated, something is likely to happen next. Right? So this is what would give me a heads up if I were in the trade room and I saw this. I would say I'm watching whatever instrument this is. And if this bar opens below this line of resistance, I'm going to put an order on to sell. Okay, so that's what a speed tick trade looks like. All right, we're going to shift gears here. You got to keep paying attention though. A lot of you guys have been, and ladies, have been struggling. Maybe have been struggling for a long time. So my question for you is, and I don't know that you've ever thought to even ask yourself this question, are you approaching trading the way traders do it or the way a hobbyist might do it? So let's look at that. Hobbyists. How do hobbyists approach trading? I happen to be an expert at this for a lot of reasons. Number one, I thought I was trying to be a trader when in fact I was a hobbyist. So I see myself in a lot of this. And as I've been doing this for now 10 years with you guys, I've gotten to talk to and meet an awful lot of traders and ask an awful lot of questions. and get asked an awful lot of questions. So I have some insight on some of this stuff that you guys don't have just because of the unique position that I'm in. Tell me if you see yourself in any of these. Hobbyists love to read and write in trading forums. Hobbyists believe that people in trading forums are a lot smarter than they are, and there's a lot of information there, and that they're going to find something really valuable in trading forums. Hobbyists will spend hours and hours watching YouTube videos on trading, believing that there's one piece of information that they're going to pick up from these videos that's going to suddenly make them successful. Webinar after again, I'm not making this up. To me, working at my trading meant doing these things, because I didn't know any other way. Nobody taught me any other way. This was working at my trading. Of course, all the books and the trading psychology and the DVDs and the going to Big Mike's, which is called, I don't know, something else now, Futures IO or something, or the Ninja Trader site or some other freebie, email you a free indicator of the month club or whatever. Oh man, I was all about as much stuff as I could get for free. So I tried tons and tons of trading systems, saw merit in all of them, couldn't get any of them to work. So I decided, well, surely I can create my own. And then back test the crap out of it. And make these little changes and then back test it again and make more changes and back test it again. And I'm working at my trading, man. That's what I'm doing. I'm working it. Of course, I worked it by just looking at static charts. You start on today and you start scrolling backwards, and you just start adding indicators and throwing lines on there and looking for something that looks compelling. Then you quit. Then nothing's working and you're frustrated. And then you come back to it. Then you quit again and come back. Sometimes all on the same day. Here's what I would do. I knew so much trading stuff and I was working on so many things. I would change trading systems in the middle of a trade. I'd use one trading system to help me get into a trade, and then I'd manage it based on some other trading system I thought I knew. So I failed miserably at all of that, and I realized, well, I'm broken. There's something wrong with me. I'm just unable to do this trading thing. So what I need is an auto trader. So the computer, which is really smart, can do all the work for me. And I can no longer be accountable for being an idiot. It's the computer's fault if it doesn't work. Oh yeah, of course when you're building your own trading system, you spend countless hours trying to figure out how to not take losing trades and filtering those losing trades. So after all that doesn't work, you read a book that says that you need to learn how to trade without emotions, right? A whole book on emotion management, maybe. Of course, this is all done, after you've managed all your other things that you have to do during the day, those life things, like the job and the kids and school and all that other stuff. You believe that there's a way to make a lot of money really fast. You just got to find it. But for the most part, you find the markets fascinating because it's really hard to figure out what's going on. So you find it fascinating, and that's what keeps you coming back. But you really only have time to approach it like you know, some guy who's on a softball team practices a couple times a week, maybe. Anybody see yourselves in this at all? Anybody? Was it just me? Do you guys do any of this? Okay, some. I knew you were lying, Bill. No, 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 not at all. Okay, guess what? Maybe you need to think about some of this. I promise you, I don't have any time in my day to be doing any of that. I have a very strict set of rules where I am basically in automatic mode when I'm trading. Practice is what got me there. I have an entire um, practice routine. You cannot learn to trade looking at static charts. When I say static charts, I mean historical charts that have already been filled out. You will never be able to trade learning how to trade or practicing on static charts because the price action is very important. It is the all-knowing, all-seeing, it's the everything of trading because you have not just 4 points of information about people's thoughts, feelings, and emotions. Because on a static chart, on a bar, you have 4 points of information only. Right? What is that? What are the 4 points of information on a historical bar? Yep. That's it. Connor's slow on the draw here. I can see your answers. He's slow on getting them posted. That's it. High, low, open, close. How many points of information are on a live bar that you can see coming in with the way things are coming in? Infinite. Lots. Lots and lots. So you ever go to, like, I was just at an airport the other day. This is my favorite part of being in an airport, and I try to get there early if I'm allowed, because one of my favorite things to do is to sit and watch people at airports. And if I saw a snapshot of them, you can, kind of try to make up a story. But if I actually see them interacting with other people and see what's going on, I can really know and understand what's going on with that person at that exact point in time. Because I have all of that information, not just 4 pieces of information. I know I manage my risk. I don't attempt to manage emotions. You know why? Why don't I attempt to manage my emotions? Somebody. Because you can't. No, you can't. That's the biggest load of crap. But it sounds really good, doesn't it? How long have you been fed that crap in trading? If you ever go to another trade room or watch a video or whatever and they tell you to manage your emotions, leave. You can't. So my faith and my ability to be a successful trader is in my experience, not my knowledge, my experience. Knowledge is something you know. Experience is something you do. Okay? So experience, let's use that. I use the car example all the time. Experience. You know how to drive a car. But knowing how to drive a car, that's knowledge, right? You may never have driven a car before. So are you going to be a good driver? You may know how to drive a car. Doesn't mean you're a good driver. Experience is going to make you a good driver. Trading is a regular routine for a successful trader. It is a regular routine. It's not where you do it when you find the time. You have regular trading hours, you have regular work hours, you have regular practice hours, you have regular study hours. That's what traders do. And you can't filter losing trades. You're going to have them. And I don't care because my losses are measured in months, not today. I couldn't care less about the last trade I lost. Do not care. My focus is on consistency. Trading, I know you guys don't want to hear this. It's not fascinating to me anymore. It was. To me, trading pays the bills. It's a means to an end. If I didn't have this to do with you guys, I'm not sure I would keep doing it because I need that fulfillment of creativity and stuff, which I get by doing this. I like to teach you guys. I like to develop the system. I like to create new education programs. That's what I love to do. Trading is something that just has to be done. But I train the way a professional athlete trains. Professional athletes spend, and I'm guessing at this, but let me guess, 10% of their time is actually competing. 90% of the time that they work on their profession is all the other stuff. Traders show up and they think, well, I'm going to learn to be a trader. Well, you have to be in the live markets to be trading. To be a trader? No. That's the least important part of the education is what you do when in live markets. So, as you sit here right now, are you a trader or are you a hobbyist? You don't have to tell me. You don't have to tell me. You can just decide on your own. And how do you want to go from here? That's up to you. You know we're here to help. All right. So down in the bottom left corner, you guys have all downloaded the reference guide and the homework. I want you to read the study guide. All right? And then read it again and again and again. Inside the homework, there's a homework assignment and there's a video. Link to the video. You're going to need to take notes on this stuff because you will see it again. And just when you thought this was over, any questions? No? Okay. Let's have some more fun. I need to close this one. Uh, these aren't going to get any easier. So I hope you guys were paying attention. Oh, wait. Ah, crap. Don't do that one. Is that the right one? Oh, crap. I think I started the wrong survey. Hold on. There we go. Sorry. That's the right one. You got a sneak peek at the one for tomorrow. By the way, it looks like Connor booted 20 people that didn't take the last quiz. All right, one more minute. Oh, you're welcome, Norm. This is just day one. Got 2 more days of it. Let's come back tomorrow, Debbie. Make sure you do your homework. Yeah, that's the intent. FT stands for first touch of any major line of support or resistance with a 120 or higher relative strength number. A speed tick attempts to measure market manipulations and when orders are processed faster than retail traders could possibly trade. So the answer was both 1 and 3. Why do HFTs manipulate the markets? Not to take out stops, not because they can, not to buy up available contracts, not to sell remaining contracts. They do it to create a reaction. They want to create a reaction so they can take advantage of that reaction. So none of the above was the correct answer. Speed tick trade only qualifies if the support and resistance line is 120 or higher. Was that what you said? Yeah, that's a trick question. Few people got it right. The speed tick trade only qualifies if the support and resistance line is none of the above. I don't measure the line on a speed tick trade. Yeah, hold on, Norm. A trading hobbyist is more likely to do this than a trading professional. Backtesting, create or buy auto traders, reads and writes in trading forums, studying of static charts, all of the above. Yeah, I know. Norm, the first one is wrong. I screwed up. The first one should be number 3, not number 4. That was my mistake. I put the correct answer in the wrong slot. Traders will practice a lot. And that doesn't mean all the other crap, reading forums and looking at static charts. And we'll go over that. An FT trade should be taken from any line that has a relative strength number over 120. False. There are other criteria for taking an FT trade. Nope. You let me mislead you with the number. An FT trade should be taken from any line that has a relative strength number over 120. In the second slide, didn't you see price going sideways right under that line and then it just popped up on one bar and hit the line? That would not be an FT trade. Yeah, you guys got to pay attention. Yeah. I'm gonna sneak up. I'm not gonna make this easy on you. Number 4 was a trick question. None of the above. I did not mention in the speed tick trade the line at the end, or the number at the end of the line, being anything. I didn't even talk about the number at the end of the line. I'll take a speed tick trade off of major support and resistance. I don't care what the number is. All right. Here's your specials for this week. If you contact Connor, the first 3 people to do a special, he's got something else for you. So there's the website. Yeah, kind of put the link in there. There's where the specials are. First 3, Connor's got something special for you. All right, any questions? We went over a lot of stuff. We're going to go over a lot more over the next 2 days. Study. You guys have the homework. You have video. So you got more work to do tonight. And all of that information is going to come in handy tomorrow. All right, everybody have a great evening. Study hard. We'll see you tomorrow at 4:30, or we'll see the rest of you in the trade room 9 a.m.